Let's talk about risk management. Risk management for beginners. Stocks go up, stocks go down. You're going to get into some plays where you win, you'll get into some plays where you lose. Why is it that when we get into a play which goes really well, we sell too early? When we're in a play that's going the wrong way, we hold on for dear life and we end up losing a lot more money than we expected to. So let's talk about risk management. How do we manage risk? First of all, as I said before, stocks go up, stocks go down. So zoom out, look at the longer term. Look at how the market tends to go over a long period of time. Look at how the stock you're trading tends to go over a longer period of time. You're so focused on the here and the now, the short term, the day-to-day activity, more often than not, you're going to confuse yourself. So zoom out, look at the chart, pick up whatever stock you want and trade it based on the longer term trend, the higher time frames. For me personally, I like to use the weekly time frame, the daily time frame, the 4-hour time frame, as these are bigger time frames. Sometimes you can zoom out all the way and use the monthly time frame if you're looking at a really long-term position or a leap. Once you get the hang of zooming out, scrolling left, seeing how historically the stock has performed, it's going to help you with your trading because then you can decide what you want to do based on previous patterns and expectations. If you are trying to trade and you have no idea what you're doing, one way to manage risk is going back to basics, going back to picking up the books, going on YouTube, going on social media and finding videos which talk about whatever you're trying to do. If you're trying to trade options or stocks or futures, go back to basics, get to studying and pick up the books again. Managing risk is very important. For beginners, I always suggest a 2-to-1 ratio. That means if you're trading and you want to shoot for a 30% return, you shoot for a 15% max loss. If you want to shoot for a 40% return, you're okay with a 20% max loss. If you're shooting for an 80% return, you're okay with a 40% max loss. That will stop you from getting in a trade, selling too early, and getting in a trade and then taking a huge L. The last thing you want to do when you're trading is get into a position where you're losing 99% of your position. That is terrible, that is horrible, that is not what we want to do as traders. Our job as traders is to protect capital. Another way to manage risk is some days you don't have to trade at all. That buying power, that dry powder, that cash is going to do some things for you. And I tell you what, if you go into trades not knowing what you're doing and you lose money, that cash, that buying power, that dry powder is no longer there. So manage risk by getting into trades when you need to, not because you want to. Only take trades where you identify a clear setup. I can't tell you how many times I've seen traders jump into trades here and there for no reason, not knowing what they're doing, and of course mess up their trade. Then when it comes to managing risk, trade with what you can afford to lose. Trade with what you can afford to actually spend and drop in the markets. There's no good saying that I'm trading with money that's going to help me make my deposit which is due on my house next week. There's no good saying I'm going to trade with money that's going to help me pay my rent next week. It's no good saying I'm going to trade with money that hopefully can pay for all the Christmas gifts which are due again in a couple weeks. That's not going to help you. That is not how to manage risk. That is a form of being irresponsible. If you want to manage risk, trade with money you can afford to lose. Have a set plan in place. Again, you can use a 2-1 ratio. Know when to trade, know when not to trade. It's obviously just as important as getting in a trade and managing your position well. Please focus on managing risk because it's going to help you when it comes to your trading. Last but not least, have discipline. If you set rules for yourself, stick to those rules. If you say I'm not trading tomorrow, do not trade tomorrow. If you say I have a busy day at work today and you can't really look at the markets, do not trade today. Be disciplined, stay disciplined. If you make money on something and you see it still going up, click away, close the chat, whatever you're doing. For those of you who trade with me every day, you guys know how we run it. Our aim is to stay disciplined and build consistency in the markets. So one way to build consistency, but if you're not with us yet, make sure you come check us out, the Royal Trading Academy. That's where it's going on. Not only are we helping you educate yourself, but we're teaching you how to do things the right way.